Good afternoon, ladies and gentlemen. Welcome to Roundtable Hall of the 2024 Asia Grassroots Forum hosted by Amartha. Thank you for all of the participants who attended the Roundtable Hall. In this session, we mainly will be focused on industry knowledge, connect with the key stakeholders, and showcase true leadership with a specific emphasis and grassroots empowerment. This session targeted to facilitate brand visibility, fosters collaboration, and contributes to market intelligence, creating a unique space for companies to drive meaningful discussions, establish credibility, and generate leads. For the first roundtable session, we will discuss on what strategies can ASEAN countries employ to foster a culture of innovation and entrepreneurship, particularly among local technology entrepreneurs? And how can collaboration with international partners enhance ASEAN's countries' capacity to develop and scale innovative solutions tailored to the region's unique characteristics and challenges? The first roundtable forum for the 2024 Asia Grassroots Forum hosted by Amartha. How can ASEAN harness innovation and seize its MSMEs opportunities? And I would like to invite, please welcome our moderator for the first roundtable session, Bapak Salman Alibai, Senior Financial Sector Specialist of World Bank. And I would like to invite our speakers, Ernest Saujana, Managing Director and Senior Partners and Head of BCG Southeast Asia, Fang Jiang, Regional Lead for Digital Financial Service of International Finance Corporation IFC, Aileen Goh, Country Manager and President Director of Mastercard Indonesia, and Fai Chetnakarnkul, Regional Director Asia of North Fund. For our moderator, Bapak Salman Alibai, the stage is yours.
Okay, thank you for the introduction. We have a very nice intimate space here to throw some challenging questions at each other. Thanks everyone for being here. We're gonna keep this informal, but essentially this is a panel discussion about some of the new technologies and emerging technologies that I think a lot of us are encountering in our own work. Things like generative AI, things like big data, things like robotics technology. But even beyond our own work, we're also, many of us, thinking about what's the applicability of these types of technologies to the world around us, and really to the development challenges around us. So what we want to try and do in this very diverse panel we have here is to think a little bit about, when we look at these emerging technologies, how can they be applied to the challenges that we see facing micro, small, and medium enterprises across ASEAN. And as we think about that challenge, the questions that we'll try to get at are really looking at what are the sorts of enabling environments and policy frameworks from governments and from the private sector that can enable these technologies. What are some examples and case studies of instances where we can really push and support the use of these sorts of technologies, and what are really the collaborations required? I think many of us have been talking over the lunch and the morning today, and you're seeing that around even these rooms we have bankers, we have tech professionals, we have development professionals, we have financiers. How can we really all come together and collaborate around bringing these emerging technologies and tools to bear? So that's about all I'm going to say to kick us off. I think we have a really exciting and diverse panel here, and thanks so much to our panelists for making the time, and many of you for traveling here to Jakarta to be here. We have Ernest Saujana with us, who's the managing partner of Boston Consulting Group for Southeast Asia. Ernest has also led the financial institutions group of Boston Consulting Group and is based here in Jakarta. We have Fang Jiang, who's the regional lead for digital financial services at the International Finance Corporation, the IFC. Feng has been working for over 20 years, really on digital financial services, access to finance, and financial inclusion. We have Eileen Goh, who is the country manager and president director for MasterCard Indonesia, and who's really spearheading MasterCard's payments expansion here in Indonesia, but also knows ASEAN very intimately from leading MasterCard's operations in other countries in the region, including Thailand. And we have Faye Chetnakarnkul, the Regional Asia Director of Norfund. Faye is based in Bangkok and manages Norfund's portfolio across ASEAN, including here in Indonesia. And my name is Salman. I'm a Senior Financial Sector Specialist at the World Bank. I've been based here in Indonesia for 3 years. So I'm going to kick us off by handing to you first, Ernest. Each of our speakers is going to tell us a little bit about their role and some of the work they do around this topic of innovation and new technologies for MSMEs. So we're going to start with Ernest, please. The floor is yours.
Thank you so much, Salman. I think very, very interesting topic for me. I think MSME is really core backbone to Indonesian economy overall, right? I think creates employment, large contribution to GDP and so on. I think one of the things that we've been working on with multiple stakeholders is I think there's no doubt that companies that adopt new technologies, digital, who are early adopters are rewarded for it, right? Our study suggests that early adopters of technology in general over 5 years generate 40% more return in terms of shareholder return as well as revenue compared to late adopters or laggards. Many of them are large companies, but the same holds true for MSME. So we did a study recently with Compass and Blibli as well, where we realized that for MSME who adopts digital and technology, their revenue are 10 to 15% higher than their peers. They can cover a lot larger geographical spread of market, and also resulted in much higher productivity, I think, over the long term. I think the bigger question that we often face is that, how do you then, in a way, push MSME and also enable them to adopt this much broadly so they're not left behind. So I think there are a lot of work that we have done, both in terms of availability of technology, but also on the enabling aspect of MSME themselves that we are looking forward to discuss and share today. And I would also add that it's great that Amartha is doing this session, because we did a study again with OJK a few years back, and if you ask the MSME directly, what hinders their growth going forward? The top 2 factors that we hear, one is actually access to financing, both to finance their current operation, but also to enable them to adopt new technology and business models. And the second thing is, digital literacy, technology literacy. It's still very, very low in a country like Indonesia. Only 20% of them think they are digitally literate. So I think thinking through how, the financing ecosystem can also work together with broader sets of ecosystem to enable this capacity building aspect to MSME, I think is something that we should discuss as well going forward.
Fantastic, thanks, Ernest. I think those are some really catchy stats that I think are nice to kind of keep in the back of our mind, that early adopters really have this huge advantage, and not only for large companies, but also for SMEs. This is really neat. Feng, I'm going to hand the floor to you next. And I think you have some slides to walk us through as well. Is that right?
Yeah, later. Now just introduce.
Okay.
Yes. Thank you so much. It is really my honor to have the opportunity to be here with all of you. And I'm really looking forward in the next 1 hour to really interact with everybody and learn from each other, especially in how we can jointly promote access to finance for the MSMEs through digital innovations. So a few words about myself. As Salman has just introduced, I'm Asia Head for Digital Financial Service in IFC, Upstream and Advisory Team. So what is my role there? Maybe let me first take one step back to share with you what IFC is doing. How many of you know what IFC is? Can you have your hands up? What I've said? Oh, many people know I've said. That's a big surprise to me. So I'm sure we have done a good job here. Yeah, for those who don't know I've said yet, we're part of the World Bank Group. We are actually the largest global development institution focused on private sector in developing countries. We operate in more than 100 plus countries, and we provide both investment and knowledge to our customers. So we are really honored to have the opportunity to work with Amartha. So Amartha is our strategic partner, is also our client. And we have similar clients like Amartha, including banks, mostly financial institutions. We have 900 plus of those financial institutions we are working with across the world. In Asia alone, we have around 200. So we give them money to support MSMEs, to support sustainable finance. And we also provide capacity building to help them get needed knowledge and talent building to do the things. So my work is then very simple, as you can see, based on what I have just mentioned about IFC's work in this space. I'm actually working with financial institutions to help with their digital transformation, help them introduce digital SME banking solutions, digital microfinance solution, digital agri-finance solution, because digital is cross-cutting. We can do everything with digital, even digital supply chain finance, digital agri-finance, so on and so forth. We also work with our colleagues in the World Bank to help regulator create favorable environment, legal framework for digital innovations and for the MSME, health, let's say, financial health, education, etc. So again, long story short, in my past 20 years working in multiple organizations, my goal and mission has been always very clear. Try to promote financial inclusion and promote digital innovation across Asia. So thank you. Let me turn this floor back to you, and I'm happy to share more about our work in this space in the later session.
Thanks so much, Feng Feng. Nice to hear about the long partnership that you've had with Amartha. And also I think, the way that you've put it, that the partnership is not only about finance when you work with innovative players, but it's also about capacity building. And we're excited to see a little bit more of those examples a little bit later. Eileen, the floor is yours. We'd love to hear a little bit more about you and about the work that MasterCard is doing in this area.
Well, thank you. First I have to say thank you everyone for being here with us this afternoon. This is quite an interesting format. So it sort of, kickstarts the creative juices and gets everyone sort of thinking about how we can all come together. I particularly like it because the MasterCard logo is two sort of interlocking circles, because we believe that the sum of parts is greater than the whole. So I love this kind of circular concept. I'll start off by saying I'm very honored to be amongst these experts today. I do feel I'm a bit on the baby end of the pool. So if I just kind of dip my toe in and say very little, just forgive me. I think MasterCard, you know us as a payments technology company, so I would say for many, many, many years, we've been, I think, a very interested observer as to what's been happening with financial inclusion. In 2015, our then CEO, a gentleman known as Mr. Ajay Banga, today president of the World Bank, talked a lot about, and I love the name here, Grassroots. Because in MasterCard, I think we believe that an economy will do well when the community does well. And we believe that financial progress for an entire country starts right at the grassroots level. That it's about enabling small businesses and individuals, and some of these small businesses will be no different than an individual. And that, I think, then sort of really shapes or gives us a sense of what the challenge and the opportunity is. Because really, it is, as what Erna said, it is about scale. It is about enablement, and more we're finding it's not just about enablement of technology, it's about self-sufficiency, it's about enablement of skills. It's about allowing individuals to understand enough so they can put themselves forward. So that, I think, has been a bit of the journey that we, as an interested observer, have been on a little bit. So in 2015, we set out a goal to say that for us, we will make sure that we will reach the lives of 1 billion people and small businesses to try and move them forward. To date, I think we've reached about almost 900 million. About 850 million, and when we do so through a variety of different means. But our language around what it means to help micro SMEs has changed from financial inclusion, getting credit, so on and so forth, to digital inclusion. And we spent a lot of time, I think, the last few months talking about digital inclusion, how to get them onto certain platforms, but more importantly, how to make sure they stay on these platforms, they don't just kind of fall out, and how to keep themselves safe, and how they can continue to grow with that technology. So I think that's that's really the learning we've had. When I continue to want to be here to have this conversation and to be inspired by all the experts in the circle. So thank you for the opportunity.
Thanks so much, Eileen. And I think that really reinforces the message that we've been hearing, that it's not really just about the technology. It's really about the skills to use those technology. And I suspect that's a challenge that a lot of our audience here can relate to as well, as you're bringing these technologies to parts of the Indonesian society. Also really neat, I like that you have this sort of target and measurement, particularly when the achievement again is so close to where it needs to be. But really neat to see that sort of this is not only a strategy, but also a very measured strategy in terms of where you want to get and how many firms you can help, and also shows you kind of the scale of the challenge. So look forward to delving into this a little bit more. Faye, we would love to hear from Norfund's perspective a little bit about you and your work and how Norfund sees these challenges here in Indonesia and across ASEAN.
Swadika, good afternoon. My name is Faye, and I'm Regional Director of Norfund, Norwegian Investment Fund for Developing Countries. Norfund is a sovereign fund, entirely owned and funded by the Norwegian government. We invest to promote long-term economic development in emerging markets. I started the office in Bangkok for Norfund about 12 years ago, and our mandate includes investing to promote financial inclusion as well as access to renewable energy. Norfund currently manages about $4 billion. About 1/3 is actually deployed here in Asia with a team of roughly 10 investment staff. And because of that, I think we have to be super focused about what we do. Indonesia is a very, very important market for Norfund and was recently added. I'll give you an example. One of our core theses is financial access. We measure our impact, similar to MasterCard, is how many clients can we serve. We truly believe that micro and small businesses are the backbone of the economies. 90% of Indonesian population is employed by MSMEs, but only 40, maybe 30% have access to formal financial services. We see uncertainty, we see risk, and the lack of access because formal financial sector cannot calculate, adjust, or provide those financial support. And that's why we need the likes of MasterCard, IFC, BCG, and Norfund to come in. And for us, I'm happy to say, we currently, because we cannot invest directly in micro and small businesses, there's only 10 of us and many, many MSMEs. So this is why we partner with institutions like Amartha and other funds and partners. And that's the reason why we're able to touch 72 million clients through our financial partners, institution partners, and provided, roughly 8 million loans to MSMEs and retail businesses. But this is done because we support financial institutions like Amartha. And I'm really, really happy to be here. And I'm only here really because of Taufan and Amartha team, and of course, learning from my peers here. It's because when we look at Amartha, we're very traditional PE growth capital. We couldn't understand fintech. We couldn't understand valuation. We wouldn't believe that you should be paying for growth for growth's sake. We believe in bottom line because that's how you create sustainable business. And when we did a mapping, Amartha stood out for us because there was a clear path to profitability. And we're very, very proud that we provided sort of the capital that allows, in our calculation, the portfolio that would allow Amartha to scale and reach profitability. And I think the rest is history. So.
Thanks, Faye. That's a wonderful story of your engagement with Amartha and where it's taken you. And I think also really neat to think about, again, this issue of measurement. And, I really like the way you put it, that for Norfund, you're really thinking about the clients at the end of the day. And, client can mean different things to different people. But when you say client, you're talking about those micro, small, and medium enterprises and the 8 million of them that you've managed to support on the ground. And, I think that mantra is something that, keeps us all going, right? And is really where we want to keep our focus. Okay, so I think that's a nice sort of overview of where we all are and some insights into how our various work fits together. Maybe we can delve into a little bit more detail as we start thinking about, at the country level or even at the regional level in ASEAN, what are the sort of frameworks, regulatory frameworks, institutional frameworks that need to be in place in order for this kind of innovation and digitization to thrive and get to MSMEs? Ernest, I want to start with you. BCG advises all over the world on strategy. What sort of specific recommendations could you offer ASEAN governments for establishing institutional frameworks that sort of effectively support the adoption of some of these emerging technologies by MSMEs? Things like AI, big data, Internet of Things. Would love to hear more about how BCG would advise on this.
So I don't know if it's only government, because in the end, everything in play because the ecosystem works, right? I think we will need heavy involvement for private sectors as well to support this innovation, I think. But to your point, what is the right precondition? I always believe, I think, in like technology adoption, we always have this mantra in BCG as like 10, 20, 70, we call it. So 10% is, I guess, is the data model, 20 is the technology platform to really scale it up. But the 70% is really the change management aspect, the people of it. How do you change your process, technologies, your capability of your people to be able to adopt this, right? So I think maybe I'll share, 4 areas that I think, we could discuss as something that would be useful to create suitable environment. The first one, actually starting from the very top, I call it like kind of the national agenda strategy, right, of these technologies. What are the technologies, I guess, as a country that we want to push adoption for? And I think in this spirit, beyond the high level roadmaps, timelines, I think we really need to put it into very specific archetypes of MSME, right? I mean, these people are very busy with their day-to-day operations. So I think putting it in perspective on how some of this technology can actually affect their business directly is very important to put up, and what is the support they will need to be able to adopt this sort of technology. So I think that's one aspect of it. The second one for me, as I mentioned, there is a capability gap today, right? Only 20% even consider themselves as digital literate in the MSME space. So I think capacity building around reskilling, it's very important. We are fortunate enough, I think, in this region to support 2 governments so far. One is in Singapore with the RISE program, where we actually do on-the-job training for people. So it's not a classroom training, where it's actually an experimental training around digital adoption, AI adoption, and so on, and eventually place some of these people in actual work environment after that. And the second one is actually the GIFT program in Malaysia, when we work with vocational graduates to really upskill them again in an AI-enabled classroom to get them ready, as they go into the real economy. And many of them do go to a lot of this MSME space as well, but adopted with knowledge on how new technologies like AI, IoT, and so on can actually change the way the business operate. So that's the second aspect of it, which is around reskill and capability building. The third one for me is around infrastructure space. I think there are 2 parts of it. One is physical infrastructure. I think connectivity in the country has been like Indonesia, we know, like outside of the major islands, still require improvement. So I think like from a government standpoint, thinking about whether there are new technologies that we can adopt as a country to provide better access to connectivity to broader population, I think is important if we were, to allow MSME to adopt this new technology. The second aspect of the infrastructure, I would say, is the utility. So things around national identity that, we have been working on the last few years in Indonesia, but also things around document authentication, the digital invoicing and infrastructure. I think these are, nationwide infrastructure that I truly feel will really move the needle in terms of ability for a new business model to emerge for MSME. I think the last part, as I mentioned, you can't expect us to, educate all the MSME around all this new technology. And for many of them, the learning curve has passed many years back, right? So I think making the solution available as, at the package level, software as a service level, so that, for MSME, they can just think of it of like, okay, there is this tool, software tool that I can use that can analyze my business pattern and actually tell me how to purchase my goods in a more timely and better manner, and therefore allow me to run my business better, is much better rather than trying to educate them how to do analytics on their own sales data. So I think making the solution available at a productized way with a clear use case is something that we potentially together with the private sector can work together, right, on how to actually make it more adoptable, more swallowable for the MSME.
I think that's a really fascinating typology, Ernest, and I like this 70-30 analogy and this breakdown of, it's about the national agenda, but it's also about the capability gap. I think these examples in places like Singapore and Malaysia make it really practical. You bring people in, you teach them about these technologies, but then you put them back in their workplaces or put them into an internship and have them actually execute these technologies. I think the infrastructure challenge is one that we would also all agree with. We know that as connectivity expands, technologies almost expand in turn and automatically. And then I think also this sort of this accessibility challenge, and I'd love to hear a bit more about this from our other panelists, this idea that you need to sort of productize technologies, that just giving everyone a training or just giving everyone sort of awareness of a technology might not be enough, but that if you can provide it in a modular product way that those who want to take these technologies easily can, you open up new potential. Maybe Eileen, we can hear a bit more from you on this. Particularly when we look at sort of digital transformation for MSMEs. So, we know MasterCard is the leader in digital payment solutions. How can technology companies like MasterCard collaborate either with the Indonesian government or even with ASEAN governments more broadly to help MSMEs navigate this digital transformation that Ernest has been telling us a little bit about?
First, I want to say I agree completely with Ernest, and I think what you said. I think governments do have a very critical role to play. I'll use an example. In the early 2000s, India was actually known for having one of the high inflation rates across the Asia Pacific, maybe 10 to 20%, depending on which part of the decade you looked at. But when they introduced digital payments, they, over the course of the last 8 years, actually brought inflation down to single digits, mid-single digits. And a large part of that, the analogy was, or the anecdote was that small micro SMEs no longer had to pay through brokers to get to the big buyers. And actually removing the broker layer and giving micro SMEs the power to go direct allowed them to negotiate better prices. There was just more data, more transparency. I think you can sort of understand. As a consumer today, when you go to Tokopedia, Lazada, Shopee to shop, you feel fairly empowered, right? You know what you're buying, you can search for the best price, and then you can get it when you want to get it. Digital has this really empowering side to it, which for a long time on the business side with micro SMEs was not available. And we talked a little bit about the agriculture industry. So in India, we launched something called Farm Pass, which is essentially a buyer-seller platform that allows really, really small farmers to be able to get onto the platform and sell directly to the big buyers, and effectively cutting out the middlemen. And if for some of you who are familiar with the agriculture industry, there's not just one layer. There are probably 4 or 5 layers of brokers, each one taking a 10% cut. Which means if the big buyer has all the bargaining power and they're only going to buy at a certain price and everyone took a 10% cut in the middle, what does the small farmer end up with? So actually removing the layers, empowers the small farmer to get the prices that they deserve for their goods. I talked about agriculture. Agriculture is one of the worst hit industries where even in Indonesia and in Thailand actually, some of the farmers never scale to a certain size. They are called micro farmers. They always stay very, very small because they can never sell enough to get credit or to expand their farming business. So Farm Pass that we have today reaches 1 million farmers in India, 2 million farmers in Africa, and continues, I think, to be one of the most important platforms. We have other thoughts about platforms like this for different types of industries that are dominated by micro SMEs. But they all come with the idea that you can be empowered to get on, buy and sell as you will, with transparency, with data, with control. So I think that's maybe a really simple example of how we see technology helping micro SMEs in a very direct way, and almost in a way that people understand, because if you know how to shop on Tokopedia, you pretty much will know how to use Farm Pass, right? So I think that's sort of my view, and I think governments have a lot to do with it. But it wouldn't have been possible if it weren't for the government also laying down what we call the utility layer, digital payments, national digital ID, the right kind of regulation. So all of that is very, very helpful. So yeah, that's basically my view on it.
Fantastic. No, I think that's That's a really catchy way of thinking about it, that digital really empowers. I think what you're describing, Eileen, is also a democratization. You're giving MSMEs access at the level they should have access. And you're also kind of getting this this economic externality of you accrue an economic benefit to these MSMEs by getting them access to lower prices or better supply chains. As a Tokopedia addict myself, I can definitely relate to the empowerment aspect of this. And I think the Farm Pass in India is a neat example. Maybe other panelists will tell us more, but I'd love to hear more as well about other examples, as you said, in areas where you have concentrations of MSMEs that can benefit from this kind of empowerment and democratization. Faye, maybe I can ask you to jump in a little bit here. I think one of the areas we'd love to learn a little bit more from Norfundet is really about how can sort of collaboration with developed economies like Norway, but also beyond, help foster these innovation ecosystems for MSMEs as well. So how can ASEAN countries leverage partnerships with institutions like Norfund to really access the knowledge, expertise, and technology transfer opportunities from places like the Silicon Valley or from places like Europe or Japan that can give these technologies and empower MSMEs in the way we've been discussing?
Sure. I think for us, and this is from a perspective that we're an investor in financial intermediaries, right? And you'll be surprised that really the ones that are pushing the technology or delivery frontier is really our investees in Africa, like Equity Bank, that started an agent banking model. And for us, as an investor, we take a significant minority, and we do take a very active board seat. And through that active board seat, that's sort of how we share our knowledge and expertise. We would like to connect our investees across the portfolio to see sort of the joint synergies, be it from our renewable, CNI, and our microfinance, or bank, and as well as fintech. But I think what's also really important is we can do so much as an investor because we don't really do greenfields unless we really, really have to. And therefore, we were relying on infrastructure from a regulatory perspective, from a utilities perspective. And I think what's really also very important for Indonesia at this stage is the need to have a microfinance license. At the moment, there are various licenses, multi-finance, peer-to-peer, etc. But I think the ability to have a very clear and sort of very well-focused microfinance will really enable a lot of non-bank financial institutions to be able to step in and provide the much-needed MSMEs financing. The need for credit bureau, because this is a way that we can ensure that it's going to be quality growth. So those are probably what I see kind of recurring theme. If you want to really unleash MSMEs, because they are the backbones of your economy, we somehow must make financial inclusion more inclusive. And that means we need good infrastructure from a regulatory perspective and having impact investors and DFIs who come in with sort of experience, and more importantly, that we embrace issues such as good governance, ENS, as well as clean energy.
May I jump in here? Because I think Kun Fei made a really interesting point about working with banks, right? We talk a lot about governments and I think the roles that maybe we have. Thinking about it thoughtfully, I think one of the things that I think we do definitely at MasterCard is we make a concerted effort to help large businesses like banks really attack the micro SME segment. One of the main reasons why banks sometimes shy away from it is because the cost to serve is really high and they can't quite tell how much risk is involved for the cost. And I think with enough data, with enough technology, and enough, I think, expertise, there are ways for even very large companies to make micro SMEs an addressable base, a real commercially viable base. And I think the more we empower large organizations to do that, the more we help each other. So it's not just the job of not-for-profits, it's not just the job of governments to do it, but large commercial entities can also see the value in it. And I just wanted to say that I completely agree with that point you made.
So it's not only about empowering the MSMEs, there's also a way you empower banks and large commercial institutions to reach MSMEs, and that's the job that all of us can do. I think this is a really nice time to bring in Fang Fang, because Fang Fang, the IFC, does a lot of this work, thinking about how to leverage financial technology and fintech as a solution for banks, for non-banks, for commercial clients. Can you tell us a little bit about that? How does the IFC approach this, and what are some success stories of really leveraging fintech and leveraging these kind of solutions, as Eileen nicely put it, to empower these sorts of institutions?
Thank you very much for this great question. Actually, I have been listening, and I found a lot of things we have common interest. I actually met Farm Pass last week in the Philippines. Very exciting work. And I think Equity Bank is also our client. We also put equity investment there. So we are helping that bank to do digital transformation. So with Boston Consulting Firm, we are also doing digital bank landscaping in the region. So there are a lot of common interests we have. And now I want to bring some of the examples we have working either directly with our investees or we have identified as their own innovation. They're happy to share. But before I go there, I actually want to ask the audience here, how many of you are SMEs? How many of you? Oh, we have one. At least we have one. We have two. Okay, that's very good to know. So we have some representative from MSMEs. How many of you are from financial institutions? Okay, we have maybe 10%. And okay, I'm wondering about the rest. How many of you are from fintechs? Okay, we also have only a few hands up. So maybe some of you can tell me which sector are you from? Academy or government? Or because I just want to make sure the cases I'm gonna present will be relevant to your life. Yes. Oh, good, good. Okay, very important. Yes. Good that we have one representative. Anybody else want to? Okay. Okay, good, good. I assume that, oh, yes, please. Oh, social enterprises are very important as well. Okay, great. So with that, let me maybe bring up my slides. Can you do that? Okay, good. So I'm going to share with you 3 cases or 3 examples. Sorry, here I'm using presentations because I feel that a session after lunch, maybe it's better to show something to you to keep you awake rather than me talking all the time. Okay, so we will talk about those examples more from the financial institutions perspective, but they're also relevant, very relevant to SMEs, which I will touch upon later. So the first example is Starling Bank. It's a digital bank in UK. So the first case is really about examples we have seen from developed markets where digital maturity level of the MSMEs are relatively high. And also the fintech landscape are relatively well established. So what they have been doing is that they look at what SMEs care most. Of course, many of them say, I want to have access to finance, but more important, they want to be better able to manage their bill, better do accounting, better hiring, better communication, better legal document, or better, let's say, manage their payment. So as a result of it, this bank identified fintechs, leading fintechs across all those segments and bring them on the digital bank's platform. So as you can see, they create a fintech ecosystem. It's like a one-stop station for the SMEs. So when SMEs use a bank service, they can use all the other services they will need to run their business as well. So next slide, please. So that's how this website look like. It's very simple, right? So they don't have to create those new solutions by themselves. They just bring everybody together. And so far, this bank has been successfully supporting 500,000 SMEs by introducing those solutions. And you can see in a market like UK, where you have so many banks and competition is up here, right? I think they have come up with a very interesting, unique value proposition using the client-centric approach. Care about what SMEs care most and offer the solutions. And many solutions goes beyond just financial services. So it's part of like embedded their financial services into all the other services needed by SME. Next slide, please. Okay, the next one will be more relevant to emerging market. Axis Bank is IFC's client, is a leading bank in India, where you have millions and millions of SMEs, and many of them, of course, are underserved. And their digital level is also, I would say, haven't been there yet. So what they have been doing, they built a partnership with Visa. I know Mastercard has been doing something really interesting as well. So they, on the one hand, help merchants digitalize their entire payment solutions, introducing QR bar and provide buy now, pay later, etc. But more importantly, they also have been providing all the other services like inventory management, sales management, even new channel management when merchants need those services to run their business. So as a result of it, actually, when merchants use those inventory with sales and purchase function provided, naturally all the data goes to the bank. And bank with SME's consent, they will be able to use those information to better serve those merchants by providing maybe data-driven lending and provide maybe post-data-based lending and even other financial like insurance products to the merchants. So this is a second example which I'm sure many of you have already know. It's also popular in Indonesia. And the next example, please. This is going to be more exciting, the next one. Yes. So HDFC Bank is another bank in India. Sorry, I keep on bringing India clients, which are all IFC clients. So what they have been doing is even take one step further to digitalize their customer. Because SMEs, as you know, they're struggling with their daily life. I mean, just forget about the digitalizing themselves, let alone their customer. So what they have been doing is that they segment their SMEs into 4 different categories. I mean, there are 4 different segments which also have a large basis of customers, including retail customer. So those 4 segments are housing, societies, clubs, municipalities, religious institutions. The same thing can happen with drugstores, shopping centers, etc. They have many millions of retail customers on those platforms. So next slide, please. I will give you one concrete example. Let's say gym, club. They have many members, but many gyms, they don't have effective tool to manage their members. So what they have been doing is that they introduce those 4 free apps to those customers, and those SME customers, like club, can further use those apps to manage their members, manage their customers. So for instance, a member can book appointment or book an event through this app, or even renew their membership through the app. So by doing so, you actually, as a financial institution, you help your SME customers to further digitalize their customers and bring the whole ecosystem together. And of course, behind the scene, the bank is, again, upon the permission of the customer, using data to provide various financial services. So those examples I have shared, I think have something in common where it needs to be client-centric. Really look at what your client need, especially your SME's client and their customer as well. And secondly, embed your service with non-financial services. Because look at how many days nowadays, how many times as an SME customer, you open your bank app on a daily basis. You don't do that, right? You might only do that when you need to check your bank balance or need to apply for a loan. But the frequency of using that is relatively low. So as a bank, you don't get enough data. But when you embed your service with other service, more high-frequent service needed by SMEs, then you naturally will increase the stickiness, loyalty level of your customer, and also get more data from the customer so that you can better cross-sell and better manage risk and better offer financial services. So with that, I hope, those examples maybe give you some idea about what we are doing with our banks, with our financial institutions to digitalize the SMEs and better promote their access to financial inclusion. Thank you. Over back to you.
Thanks, Feng Feng. I think actually that was very nice timing because it was nice to really make this concrete Eileen mentioned the way that we need to support commercial banks and financial institutions to find these solutions to empower MSMEs. And I think these are exactly those types of solutions. So these are three really neat examples. Okay, so I think these examples raise a couple questions for me. By the way, I'm Canadian, so I usually ask nice questions, but not always. So this is where the questions are going to get challenging. Yeah. Look, I mean, I think one thing that we often think about when we look at these sort of tech solutions that can do a lot for MSMEs is how do we kind of create an environment that kind of promotes innovation and promotes these types of solutions, but also thinks about the risks and the ethical concerns that we might face. Fang, you talked about getting more data from clients, and that's usually a good thing. But there's also a lot of safeguards and ethics that we need to think about. So the first question I want to throw at the panel is, how can we think about striking this balance between innovation and responsibility and ethics? Where do we draw lines, and what kinds of things do we need to be thinking about, or are you thinking about when you look at this challenge? Ernest, maybe I can start with you, because you're making eye contact with me. So.
Okay, this is not an easy question, right? Maybe I'll cover it from both angles, right? I think one thing that is also important is to make sure that the regulation doesn't stifle innovation. And for me, I think a lot of government in the region, if you look around, have experimented with this, right? And I would just name three things that comes to mind. Like, I think one is, how do you do a risk-based regulation? So even the same technology, when you apply it in different use case, have very different risk. And the last thing you want is there a regulation that cuts across everything, which we often see in this part of the world, that doesn't even allow, therefore, application in environment where it's actually pretty low risk, right? So that's one aspect of it. The second thing I would say is also, how do you become a lot more adaptive? I think a lot of the, especially you talked earlier about IoT, AI adoption, and so on, is relatively new technology and use case for MSME, however you look at it. So how do you make sure that you don't create a policy that is out there to stay for 3-5 years? It's important, and be adaptive in terms of when you see new cases that people are building. How do you then adapt the technology as opposed to trying to be all-encompassing, all-restrictive technology upfront? I think that mindset is important. The third thing I would say is like experiment more. I think would expect regulator to experiment more with regulatory sandboxes and allow, work with a few industry players to experiment in technology, even with some degrees of risk in it. At least when things blow up, it blow up in a small scale, and then you adjust and orient against it. And I think a couple of government in the region have started to do that with a few innovation on blockchain and so on. I think this is the mindset and the approach that regulators need to take, like develop the regulation alongside the industry players, as opposed to doing it in a classroom. I think to the other point, I also do agree that the governance ethical aspect of technology is important, especially I think we all talked about AI. So the aspect of how do you protect customers from data and allow them to have democracy also in terms of managing their personal data, right? On what they are willing to share, not to share, or even change things if things are incorrect about themselves. And more importantly, secondly, how do you ensure that the application of this use cases doesn't create biases, right, in its application? I think those are the two aspects. I don't have an answer clearly how to drive in a large scale, but would be the two that would keep me awake, right? As if I were the government thinking about application of these technologies.
Thanks.
Making eye contact now.
Yeah. Because now everyone's avoiding me. That's the when the difficult question comes. No, I mean, I think this is a really nice summary of what we need to be thinking of. So when we think about regulations, we need to think about risk-based. We need to be adaptive. We need to think about sandboxes so that we sort of evolve. Regulation evolves as industry develops. And then I think you pinpointed, Ernest, two really important issues that we see a lot in the media, but it's a lot of on our minds as well, which are around personal data protection and around things like biases in algorithmic lending, in credit scoring. We see that a lot in Indonesia right now. Any insights on these issues, particularly some of these challenging issues we see with biases, with data protection, maybe not only from the government side, but also from the side of institutions that have to grapple with these challenges?
I can quickly comment, and I think technology is great, right? And I think we have to balance it a little bit about being practical. In the markets that we operate in, it's not the app, right? It's actually the people in the community, the loan officers that truly understand the risk. And I think we have a lot of people spending a lot of capital, and we're also obviously not innocent at that, right? But the reality is, technology is what it is, but what's more important is the knowledge of your end clients. And I think I want to sort of push that there is a balance. When you're trying to serve MSMEs, they don't have collateral, they don't have cash flow-based statements they can share with you, so you end up relying a lot on the loan officers. Where I see innovation or technology being implemented is actually digitization of the process and not so much on the credit decision itself. People are developing them, but based on our experience, it's pretty mixed. So maybe that's the part that remains a little bit opaque and needs to be further developed, and that's the part where the data protection and biases and questions surrounding that really emerge. So I'll leave it there, because I think for us, what we see really kind of works nicely is sort of a hybrid model where you kind of make the operational process highly digitized. So you take away sort of the inefficiencies of serving 1,000 clients in a small village. How can you do that? How to serve the last mile? But then the credit decision itself, we still see that's largely based on the loan officers and how great you are at knowing your customers.
So I'll add a little bit. I guess this comes right down to execution. We talk a lot about what happens at policy with government, but I think ultimately success is kind of when the rubber hits the road. And my view, and this is just my view, I don't speak on behalf of the broader organization, but my view is, look, my observation has been that regulation is a bit of a blunt instrument. So over-regulation is quite painful. Under-regulation just simply means nothing gets done. It's actually up to the goodwill of the private entities to do it. But I will say a few things. One of the most exciting things about financial inclusion and digital inclusion is not so much the technology, but the ecosystem. And actually, if you kind of peel the onion a little bit in terms of some of the most exciting things that we've looked at that really drives change, a lot of it is ecosystem-based. Buyers, sellers, people who have market power, bringing people who don't have market power. So if you look at it then from a pure technology perspective, how to keep people safe and how to make this technology work well, at some point, everything gets connected. You can call it a cloud, you can call it a network. But our view has always been this. Given the type of cyber crime that we've seen in the world today, scams and all of that, our view, and yesterday I heard a piece of news about how even IoT devices are quite dangerous, apparently. They might jump up and eat you. I don't know. It's really important the network is intelligent. So that's the first thing I'll say from a MasterCard perspective. I've spent the last 6 or 7 months in Indonesia speaking to many governments quite interested in scams. I think I'm in love with Ernest, I'm sending money to him. Actually, Ernest is nothing. He's a scam. My view on this is you can't protect people from people. You just can't protect people, from other people and from themselves. Some of the worst fraud we've seen have been perpetuated by agent banking. So you go out there, you deploy agent banking because that's the only way to reach right down to that person in that village. But that agent banking network that's been created is corrupted. In some parts, not all of it. That's one of the worst we've seen. In some of the markets in Southeast Asia, digital lending, digital loans, some of the worst fraud we've seen have been in digital loans, non-face-to-face. Does this mean we stop? No, it just means we build better technology. Somewhere in the middle, the network needs to get smart enough to figure this out, because you can't protect humans from humans. So that's the first thing we'll say. And I would say that as MasterCard, we've probably spent most of the money we've invested in cybersecurity, just because the network needs to get smarter, just because it doesn't have to be your job to protect yourself. We get it. We can be the first line of defense. So I think that's one. The second thing that we've seen, and we had a bit of a crisis moment when GDPR came in the EU. Oh my God, like what are we going to do? All this data, it's not consented, we can't use it anymore, right? And then we started, I think, trying to figure out how you could get the same quality of insights without all of the data. Without all of the data. And generative AI is actually quite, it's one of the utility tools that we use. If you don't have all of the data because it wasn't consented, or you're not supposed to know it's Ernest, or it's Fang Fang, or it's Fei, you can still come up with insights that are very, very helpful. And some of the leading thoughts around how we use data to help enterprises is really about how to get more without having to get all of that data. Because frankly, you shouldn't have all that data. That's just too much as well, right? So I would say from a MasterCard perspective, there are probably two things. A, it's the ecosystem, and we need to find a way to keep the ecosystem safe somewhere at the network level. And then the second is we didn't need that much data to make these decisions. And it's time we started to figure out how. Now, what I think, the only regulation I want to comment on is this regulation that everyone's reviewing around AI. And so while I understand that generative AI can be dangerous, some of what generative AI is doing, at least for us, is in financial scoring, alternative scoring, right? Helping us to predict whether someone is safe to lend to. So if that regulation comes down like a blunt instrument and stops us from being able to use it in a way that's helpful, that's actually quite hurtful to the cause that we're pursuing. So I would say, there are pieces of this and that which I think well-meaning governments will say, AI is dangerous and we should try and, follow what the EU is doing. The Americas are looking at it as well. But I would say also specifically for scoring and trying to use very little data to do much, much more, we need to also be very thoughtful in terms of how we engage governments in lobbying for some of this.
Can I also just add one point on that? I'm mindful of time, so very briefly. I think technology is a tool, right? So it cannot be called as good or bad. It really depends on who are using it and how do you use it. So I still vividly remember microfinance sector around 20, 30 years ago. We have this whole, let's say, scandal coming out from India initially and then become a big issue. So I've seen World Bank Group as a whole introduced the responsible finance principle, which have been widely used right now. At that time, we don't have much technology. But now, with technology, the situation becomes more complex. So we add another set of rules called digital responsible finance. And those high-level principles really gave some high-level guidance to the government and financial institutions to better use their technology to protect the interest of the customers. So I just want to say thanks also to the World Bank's work in this space. I know you're a moderator today, but you don't have much chance to talk about World Bank's great work, but you're really doing something great also to protect this ecosystem. Just want to add on that. Thank you.
I'll take it.
You're blushing.
Okay, no, I think this is fascinating, and you handled with poise what I thought was a challenging question, which I threw at you. I think it would be nice maybe at this stage to turn to our audience and any questions for any of our panelists or all of our panelists on what you're hearing here today.
Yes.
Please. I think we have one this side, and then we'll come over. If you could introduce yourself and perhaps tell us where you're from, and we're ready for your question. Can we start on the right and then on the right?
Hello, I'm Simon Lynch. I'm from Opportunity International. We support microfinance institutions in Indonesia and elsewhere. As we go further down the poverty pyramid, you move much more away from cash flow analysis and typical analysis of business, more towards character lending. The Grameen approach has sort of worked as a filter where the women, because of the cross guarantee, etc., filter out people that they don't trust. How do you feel technology can replace character-based lending?
Great.
Support character-based lending.
Well, there are a couple of examples. The most popular ones are the ones we have seen in the e-commerce space, where platform like Ant Financial or Ant Group nowadays, they're really using a lot of behavior data of the merchants to predict their payment capacity. So those things goes beyond, putting this way, I think the beauty of this type of module I have seen compared to the group lending module is that group lending module works very well in rural area where you don't have collateral, you don't have any digital data, everything is done manually. So you really have to rely on the trust among the group to give them the credit. However, when you move to the urban area, people don't know each other. They don't even know their neighbors in many cases. So how can you still give them loan without using group lending? And those merchants in many times were SMEs, they also don't have collateral, although they live in urban area. So I think e-commerce is just one solution. It's not a solution for all. But what I have seen is that they have been using the transaction data between one merchant to the retail customer or the buyer, seller, so that they can actually predict what is the turnover, what is sales, whether this person is in good track record in terms of sales and purchase, etc. And they have been using this so-called 310 solution. So you can apply for a loan in 3 minutes. We use 1 minute to process your loan, and we disperse in 1 second, in 0 second. Well, they call zero, but basically, at the same time, once the loan get approved, it reach your account, your Alipay account, or any bank account you are requesting. So they have been facilitating billions and billions of US dollar loan to the merchants and successfully help people who live not within that, let's say, village ecosystem, so that they can also get access to loan. Again, use behavior data, sometimes use, but most of the time I think the most important indicator with the strongest predictive power is the transaction data the merchants has on the e-commerce platform. So that's my 2 cents to this question, and also happy to hear other people's view.
No, I would agree with you, but I would also, I'm just reflecting on what Eileen and Faye said earlier, right? Like, I think a lot of this group lending model as well also needs to come hand in hand with the capacity building aspect of things. And I think that's how the model can really value add, right, to the success of the MSME. And I think the use of technology on that second aspect is equally important in my mind beyond the credit scoring aspect, which I think it does very well, right? The Grameen model, especially in the rural areas you mentioned, because you know the community. But getting digital adoption to these women in rural area is much harder than the urban area. And I think really the use of technology to introduce them, give them exposure, and also show them the use cases on how they can actually apply it in their business. It's important to upskill them and help them to be more successful in the long term, right? So I think that would be one aspect that I think is important for institutions to think about.
Eileen, Faye.
At least within the MasterCard world, when it comes to alternative scoring, we have two things. We have the willingness to pay and we have the ability to pay. So they're two separate things. We already understand these models. We work with many partners around the world to develop these models. They're specific to the markets, the institutions. So ability to pay is just how big the loan should be. Willingness to pay is behavioral. And I think to the point that Ernest and Fang Fang made, they're made out of different attributes. But all of it has to be digitized. So all of it has to come through in the form of digital data, right? Whether it's stuff that we get off your mobile phone or it's information that comes through a mobile banking app and all of that. So I think the models are there. The big question is exactly what Ernest said. How do we get them digital? Because it is actually quite not as easy. And in some of the markets where we've had some success in this, we lean in on the ecosystem. So, you know, at the center of some of these small businesses will be a big buyer or a big seller. And that's where the compulsion to be on the same platform so they can buy and sell more effectively will come. The first loans that I've seen given on a model like this are typically one that's actually borne by the seller. So the seller actually will extend more goods and services. So they take the balance sheet risk. It's not a bank, so it's not actually a cash loan. But they start there because that then elicits the behavior that we want to see. We want to see what this person does when they suddenly get more goods than they can actually pay for. Because that's the loan that we're looking for, and that then triggers a bit of a cycle. Now, once that starts, it starts to build up a pattern of data that's actually quite interesting. So you know, we talked a little bit about the execution. The technology exists, and some of this is not just a PowerPoint slide. The question is the execution. who you will execute with, how it's going to be executed, and how far you can take it. But that's at least some of what we've seen, at least in the MasterCard world.
It's fascinating. Faye, please.
Yeah, firstly, thank you for the opportunity, Fan. I think you have supported us in a number of markets. I hear you. It's difficult. This is grassroots, right? It's not small businesses in urban area. This is grassroots. And even having a smartphone is not, in some areas, not possible, right? So I think I sort of see this as a sort of a journey. And I think the journey should be on the microfinance institution itself to make the process as efficient as possible. And I think collect data, and I would imagine some of these loan officers are sitting with wisdom of how to lend, perhaps translating that into a credit scoring system in some shape or form, and testing it out might be a good way to go forward. But that's the challenge we're in, right? We want to serve the people that need it the most, but they live in rural areas. How can we do that in the most efficient way, in a way that also preserve the financial sustainability of our institution? So I'm not sure I have an answer for you, other than I hear you and I agree with you. It's not easy.
But just talk about the grassroots. There are two solutions we have seen, we have been trying to do with our client. One is supply chain, because many of those small farmers, they're part of the big supply chain. So we digitalize the supply chain service provider. Another solution we have seen is that we digitalize the loan officer. So loan officer use their mobile phone app, go to do all the investigation on site and give the loan on site instead of bring the farmers to the branch, which take long time. So those are the two practical solutions we have seen. I mean, they cannot kill 100% of the questions, but we're trying hard. Okay.
And execution matters, I think, is the... I want to take one more question, and we're running a little bit short on time, so I'm hoping this discussion continues over the course of today and tomorrow. But I want to take one more question from this side of the room. Am I not allowed to take one more question? Okay, this is not on me. We're at our time. Okay, one more question.
I guess I'll just make this quick. I'm Andrew from Amartha, and thank you so much for your time, for being here. It's actually a very simple question. One of the biggest development in technology currently is AI, of course. And it's in this very data-driven economy currently. Yes, AI does bring a lot of positive impacts. As mentioned, a lot of systems for managing inventory, a better legal basis, and better information for MSME. But my question is, what if AI replaces the people who can give you those services? That's one of the biggest concerns currently in the discussion topic that I know. As a lawyer myself, what if currently ChatGPT just released the GPT 4.0, which could provide you with legal data and also legal what do you call it? Even documents based on ChatGPT. And my concern is what are your thoughts on those AI replacing human interactions in those business needs? Yeah.
All yours, Ernest. Who's going to lose their job first?
Well, it's a difficult one. To be honest, in the future, I don't know how this will go, right? But at the moment, at least when in our AI work with institution, I don't think anybody has gone all the way to actually adoption of AI directly to end consumer kind of play. I think a lot of people are using it to either make their processes much more efficient or to make the frontliners, their people, work better. So even in the sales time when we work institution around wealth banking, for example, what the Gen AI tool does is actually gather the customer insight, provide product recommendation for people to have conversation with their client. But at the end of the day, there is still that human interface that have to check, right, whether these are the right things to bring to the client, but it makes their life easier. In the future, things might change. But at least maybe I come from also the older generation, there are still I think when we do customer study, I don't think at the moment, at least for the next 2-3 years, people are fully comfortable of only dealing with recommendations that are generated by the data. I think that sort of human interaction is still important, but I think ability to for companies and also for government think about how AI will actually change the business processes and so on, and therefore where are humans really needed in this loop will be an important discussion to have.
Okay. I think that wraps us up then before we're ushered off stage. But I want to say a big thank you to our panelists, to Ernest, to Feng, to Eileen, and to Penny.